Hello, everybody. I want to talk about an idea that I had a question. When's the next bear market? Well, guess what? Nobody knows when the next bear market will be. And for those of you that think that bear markets, that they're no big thing, like this last one that we had, this V bottom, and they recover and you can hold through them, I'll have some bad news. All one has to do is look at Japan, that had a stock market crash or bear market in 1989 when the stock market was 39,000. Here we are today is what? 2021? You do the math. It still has not surpassed that 39,000. Bear markets are ugly, yet they can give you the greatest opportunity to make money. The greatest profits are coming out of a bear market. So how do you know? What do you do? I can just tell you what I do. No one knows when a bear market will be. You always want to be invested in the stock market because really what you're doing is you're not buying a lottery ticket. You're buying a piece of a company, at least you should be, that's making money. Think about, I'll give you an example, Shopify. How many people have Shopify stores? And every time they're doing something, if you bought Shopify stock, you'd made money. Or PayPal, every transaction, or Microsoft when people are using their software, or Adobe, or Intuit, or again, you want to buy the strongest stocks in the strongest sectors when the market is healthy. And most of the time the stock market is healthy, but then you have these reactions that are just brutal that you need to protect yourself. So what I want to get across is there's a thing, you have to combine fundamentals with technical, which I talk about all the time. You want to buy the strongest stocks that are making money, companies that are making money. And there's just a handful of them, a very small percentage. Ideally, you want to be in them 100% when they're above the 200-day moving average. So you have to learn a little bit about technical analysis. Very simple. You can just read about what a 200-day moving average is. When you're above a 200-day moving average, you want to be long. You're below the 200-day moving average, you want to be out. Red light, green light, or green light, red light, however you want to call it. But the fact is, I'd make it a little bit different. I add in a little bit because it just depends how much pain personally you want to go through. I use an idea of a 50-period moving average, a 100-period moving average, and a 200. When the 50 is above the 100 and above the 200, all of those, good stuff, great. I want to be 100% long. Then there's going to be times, which is going to happen quite often, the market gets a little bit choppy. It's not fun, but it's reality, and it will happen. So I scale back a little bit. I want to be 50% invested into that particular share. And if they're both below the 50 and the 100 or below the 200, see ya. I'm out because I don't know how ugly that can be. You know, look at 2008 as an example. Bear markets can make you a lot of money when you're coming out of them. And also they can take your money. So you need to have a plan, a really thought out plan. And that's what we do. That's what I try to do is try to help you to make a plan. So that's it for today. Have a great one. Appreciate it.